Greetings. Once again, we are here to share about insurance. In our previous video, we started looking at insurance, and that was our introductory part about this. And there we concentrated at the reasons why we actually, as individuals, need insurance. And in this video, we're going to look at insurance as a term. What does it refer to? And we know that insurance actually is divided into four sectors. There is general insurance, life assurance, asset management, and medical insurance. Currently, those are the sections of insurance. Now, when we go to the term, by definition, insurance refers to the transfer of a risk from the insured to the insurer at a cost. Now, note, it is at a cost. Now, let me take an example using general insurance, which actually most of the people have complaints with due to misconception of the section, and actually they end up branding all this on the sector itself. So by the end of this video, I'm sure we'll have agreed that actually these are wrong accusations due to some factors. So let's say general insurance mainly deals with assets and properties, like for example cars, buildings, lands, and so on and so forth, but it's not limited to that. So if I take insurance, so let's say I want to insure my car with a particular company. Now we have to consider that when you come to insurance of cars, or okay, even if buildings, normally there are three sections. If we come to a car, there is insurance for accidents, insurance for fire, and theft. Now, if someone takes a fire insurance, normally people have been having such complaints whereby someone takes a fire insurance, but then instead the other two risks, any of these risks happens. For example, it is either stolen or he's involved in an accident, and then this person comes back to the company expecting it to pay. But remember, this is a contract, and the contract states that the insurance is against a fire. Now, why report an accident and then after all come back complaining that the company actually cheated you, yet you yourself, you know that it was a different insurance policy you took? And because this is a contract, the terms of the contract apply. If the terms state that the insurance is for fire, then why do you expect the company to compensate another kind of risk? So that is another wrong accusation that people have been having with this sector. And because of that, the sector decided to come up with a comprehensive insurance policy which covers all these risks in case someone wishes to cover them. So it was because of that. Now, let's say I want to take up a comprehensive insurance for my car. Now, in taking up this insurance, so this is a service. Now I'm exchanging this service at a fee, at a cost. So meaning, on transferring this risk from myself to the company, my money has already been compensated for. Just a matter of me paying and them giving me the policy document and the assurance that in case the risk happens, they will compensate, then it is done. The rest is on their part. Otherwise, my money, I've received what my money was worthy for. Because this money is paying for this service, the transfer of the risk from you to the company, it is what you actually pay for. So this is it. So even in such cases, people come in on occurrence of another, let's say, without occurrence of the risk stated in the policy, people come back to insurance companies. Like for example, this general insurance is normally short term. It is year. It has periods of a year. Rarely does it go beyond a year, and actually it can go to as short as the period of travel. Like people who insure their goods traveling from abroad to the country, so they can be as short as that. But now let's say at the end of the year, people still come back to the company in case the risk didn't happen, requesting, like hoping, actually people expect to get back this money. But remember, the money was to pay for the service, to pay for the transfer. So Meaning it is not that you're dating the company as some people conceive it, because the risk has not happened and the company has not, like, you see that the money is not spent. No, the money was to pay for the service, like the transfer of the risk. Even in the case when the risk has not happened, you're not dating the company. That is the mode of operation of the company. Now let's take an example. Okay, another thing to consider. Remember, as you're insuring with a company, you're buying a certain policy. There are other people buying that particular policy. So let's say 50 people have a certain policy with a company, and the company puts all this money in one pool to make a pool for that particular insurance policy. Now, if you don't get the risk, it does not mean that the other people don't get the risk. So in case the other people get the risk, the company uses this money which it got from the whole 50 people, and then it compensates those who got the risks. So implying this money is used up, then why should you come back and say you're dating the company? Because that is another thing to consider. This money is used to compensate other clients, and it is used to run company activities in regard to those particular policies. So understanding that insurance is actually a financial institution, this money is used to run certain activities, and this money is actually paid for the service of transferring the risk to the company. So at the end of it all, there is no way someone can accuse the company of cheating them because they didn't have the risk, so they expected to receive the money back. You even take an example. If you are a business person, would you see it fair? Like someone, let's say they give you their property, in case anything happens, you pay, but they don't pay. But the money they give you, they are to pick it in case the risk does not happen. Yet other people also insured and use that money to compensate other people. So you see that there is no correlation between the two. Like actually, if it was like that, then it would be like this service was actually for free. Because if someone says they will come, if it is like that, because from definition you've seen that the transfer of the risk is at a cost. So the payment done is paying for that. So if you're saying that you get the money is to be given back in case the risk does not happen, it is like this service was for free, which is not the case. And actually, there are other sectors that operate in such a way whereby money is not refunded. People don't complain about those sectors. But why? Because they understand it, that is their mode of operation. So we should also understand that this is the mode of operation of these financial institutions. And actually, the cheating would be in case the risk happened and the company never compensated. That would be that's where the cheating would be. But in case it does not happen, then why do you accuse the company that it cheated you? So in this case, personally, I take it as a win-win situation. When the risk happens, you get something big, having paid something small. If it doesn't happen, then the company benefits. So it is a win-win situation. So in the next video, we shall continue from there and look at other things. Thank you. Just keep tuned. Love you all.